Welcome back. Joining me with more insight on the day's trade is Annatjie Van Rooyen from Regency's Business School. Annatjie, thanks so much for your time today. So really, markets in a frenzy. One day we're in the green, one day we're in the red. This time around, I guess, it's really fears around a fully fledged global trade war between the world's biggest economies, that being China and the US. There's been so much tit for tat action playing out throughout this week. I'm sure this is, one of the biggest concerns for markets.
Good afternoon, Nsoneng, and thank you for having me. Yes, you are 100% right. So at least there's some good news today. The JSE has opened in the green and it's currently following the US futures higher, for now at least. Some stability has definitely returned to the global markets on the back of lower country-specific tariffs announced by the US, which have provided a floor for investor sentiment. So we've also seen oil as a beneficiary of the improved sentiment, despite the shock supply announcement by OPEC previously. Unfortunately, South Africa's manufacturing output has remained under pressure with a 3.2% contraction.
Yeah.
But the good news is that South Africa now only faces 10% tariffs and not the 30%. Also, only for the next 90 days,
Yes.
but that's very good news for us. And then, of course, we also face that 25% tariff still in the auto sector. But the market's looking good today.
It's interesting to see, that dip in the manufacturing sector and the automotive index, the one dragging it down the most. And here we are also dealing with this 25% tariff from Trump. What have you made of, that in play, and just how that's weighing on our car industry, our automotive manufacturing industry?
Yeah, well, obviously it's negative for us going forward. So we need to get out there and negotiate with the US administration, because it will definitely affect our export numbers. So, and also we are worried about lower demand for motor vehicles. So even if we can get some kind of reprieve, then it all depends on what happens to our trading partners. So still very uncertain as to where we're going to end up. But one must just try and block out the noise and focus on valuations for now, and not get into a panic, because, obviously the Trump administration is trying to get parties around the table to negotiate, and I think that is where everything will end up eventually.
Trump really using those tariffs as a bargaining tool. And one thing Trump's tariffs overshadowed this week was the US inflation print. Prices easing to 2.4% in March. But I guess nothing to be too excited about as, inflation moves closer to the 2% target, as those tariffs, present an upside risk to consumer prices.
Yes, you're 100% right. So it was a positive number, but unfortunately the outlook for inflation remains bearish at the moment. And there's still this uncertainty, because we're entering this 90-day period of uncertainty right now.
Yeah.
And we're still not certain whether this is going to be, or whether the tariffs will cause a once-off increase in inflation, or whether it will be over a prolonged period of time. So the inflation prints, all the economic prints right now are overshadowed by tariffs. And until we have a final outcome, it will continue to be that way.
Annatjie, if I got maybe 10 Rand for every time I heard the word uncertainty this week, I'm sure I'd be a rich woman. One thing we can be certain about, though, is that Vukile Property Fund is really, really adamant on, capturing the Spain and Portugal market. They've just sealed another deal in Portugal, and the group now having a strong presence in both those countries. What have you made of that move in particular? And I mean, they're really eyeing further growth in that region.
Yes, look, it's a brilliant acquisition. That center is 100% occupied, and it's going to be funded by cash and in-country debt. The total number was 63 million euros. This is a high-quality retail acquisition, and it's a great value add to an already diversified portfolio, and the dominant position that the company has across two of Europe's strongest economies, represented by Spain and Portugal, as you have mentioned.
Yeah.
The effect of tariffs on economic growth of the the EU, sorry, is still uncertain, but obviously, clearly, expansion plans are going forward, and it's not being put on hold, which I think is very positive.
And I spoke to the CEO of the company, Lawrence Rapp, and he did say that, they're not putting anything on ice as yet, as they expect, that economy to continue to outperform. We might see some, like less growth, but they are still positive that growth will be strong in those regions. Let's move over to a company that's not doing so well, Gemfields. They've mentioned that tough trading conditions is weighing on the operations, and that led to a widening of the full year loss. Just your insights on those numbers. They've also, I think they're planning to launch a rights offer to raise about $30 million.
Yeah, the revenue there has plunged by 18.7% due to lower production of rubies and emeralds. The operating costs have decreased by 3.9%. They've reported adjusted headline earnings loss of 1.8 US cents from headline earnings per share of 1.5 US cents per share previously. They've experienced challenges in Mozambique due to security concerns and further faced production challenges in Zambia. They'll seek shareholder approval now for a rights issue to strengthen their balance sheet, and the aim is to raise $30 million US. This rights issue will be underwritten by their two largest shareholders, and the ratio there will be 10 new shares for 21 existing shares at a price of 106.8 cents per share.
And quickly, before I let you go, what is your stock pick today? Where are you seeing opportunity?
I'm going to go with Alphabet, but Alphabet with some gold protection. So
Okay.
I do think that investors should seek phased-in entries in the stocks that they want to based on forward earnings expectations, and Alphabet fits that description for me. But due to the elevated levels of uncertainty and the volatility in the market, it's prudent to hedge your positions now with gold exposure via ETFs or gold miners. And I do think that Alphabet will continue to benefit from attractive growth prospects for AI, and the forward PE has come down to 17.46. So obviously the forward-looking statements will be closely monitored for possible changes in commitments to capital expenditure, but the company has recently reaffirmed that they remain committed of capex of $75 billion for 2025.
Annatjie, thanks so much for your time and just taking us through the day's trade. That was Annatjie Van Rooyen from Regenesis Business School.